Hey guys, it's Julie here with TipRanks, and today we're taking a look at a couple of the best rated stocks of the week. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at a couple of trending stocks. These are stocks that have been picking up a lot of attention from Wall Street analysts lately, and specifically we're narrowing in on some of the best rated stocks of the past 7 days. We're going to take a look at these companies, what it is that they do, and what these Wall Street analysts have to say lately. We found these companies using the TipRanks Trending Stocks page. This is found under the Tools menu, and here we narrowed it down to the best rated over the past week. You can also look at the last 72 hours or 30 days, and the best, worst, or most rated to get your list down below. And just before we jump into today's stocks, this is a friendly reminder that if you enjoy the video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also download the TipRanks mobile app to access all of your favorite investment research tools on the go. Links are in the description down below. Let's get right into our two trending stocks. First up, we're taking a look at Intercontinental Exchange. They trade under the ticker ICE, or ICE, currently priced at $162 per share. Over the past year, the stock has climbed 47%, and in the last 3 months is up another 12.8%. They do score a 10 out of 10 on the TipRanks Smart Score, with some increased hedge fund activity, very bullish news sentiment, and positive technicals and fundamentals. Intercontinental Exchange is in the business of online marketplaces and operates international exchanges and clearinghouses. They offer traders access to a wide range of financial exchanges in North America and Europe. Traders and customers can access 12 regulated marketplaces and deal in stocks, equity, options, energy, and credit instruments. They own and operate several clearinghouses in the US, Europe, Singapore, and the Netherlands, as well as one for credit. ICE has offices around the world and in 2023 brought in about $8 billion in revenue. Taking a look at what the bulls versus bears say. On the bear side, it is said that we won't see annual earnings per share growth achieving a double-digit pace anytime in the near future. But on the bullish side, they said that there is energy trading growth, an improving outlook for fixed income data growth, and stabilizing growth in mortgage tech. They shared their Q2 earnings report at the start of August, having some mixed results. Earnings per share did beat, but revenue fell slightly short of expectations, despite coming in at record levels. Their Q2 earnings per share came in at $1.52, beating by 3 cents per share, while on the revenue side, it came in at $2.3 billion, growing 23% year over year, and again at a record level there, but slightly missing expectations. In the past week, we've had a lot of 5-star analysts reiterating buy ratings on the stock, including quite a few increasing their price targets. That include one analyst from Piper Sandler. They noted that short-term upside might be limited at these levels, but the firm expects the exchange and trading companies to report solid Q3 results and continue benefiting from persistent volatility around the U.S. election season. And while lower rates create net interest income headwinds for e-brokers, Piper expects a more favorable retail trading environment and believes overall account growth will remain solid. And we also had an analyst from Barclays increase their price target. They believe that we continue to get closer to a normal market environment, with the initial public market and merger markets showing signs of life and rate expectations driving renewed optimism. However, Q3 itself has seen softer than expected activity. With 15 current analyst ratings, International Exchange does come in as a strong buy, with 12 buys and 3 holds. And the average price target comes in at $178, implying an upside potential just over 10% from current prices. Looking at all the most recent ratings from this past week, we have all buy ratings coming in, and like I said, quite a few increasing their price targets. From these ratings, our low end price target is a 7.7% upside, and our high end is up around 23% upside from RBC Capital here. If we scroll back a little further, our low end price target is a hold from back in August with a downside of 5%. And our second trending stock of the week is Apollo Global Management. They trade under the ticker APO, currently priced at $136 per share. They've climbed 55% over this past year, and in the last 3 months are up 15%. They also score a 10 out of 10 on the TipRanks Smart Score, with bullish blogger sentiment, increased hedge fund activity, and very positive crowd wisdom. Apollo Global is a global asset manager offering alternative investment management services and retirement solutions. They have offices in 26 cities operating in many countries, including the US, Germany, Italy, India, China, Singapore, Japan, and Switzerland. They invest across credit, equity, and real assets ecosystems in a wide range of asset classes and geographies, with a significant focus on the private investment grade and fixed income markets. Their retirement services business, Athene, provides a suite of retirement savings products to help their clients achieve financial security. And taking a look at the bulls versus bears, on the bear side, lower rates could be a headwind for the retail annuity business, and revised guidance does create some headline risk. But they said that new 5-year targets suggest a larger earnings contribution from highly valued fee-related earnings, and their presentations of their new 5-year targets were well received. Apollo shared those 5-year targets at their Investor Day on October 1st. They set targets for the next 5 years that include assets under management rising to about $1.5 trillion, origination at $275 billion plus, and average annual organic inflows of over $150 billion. That followed their Q2 earnings report back at the start of August, where the company did have an earnings miss. For their second quarter, they had earnings per share of $1.64, missing expectations by about 12 cents per share. Revenue came in at $6.02 billion, and management said that they generated record fee-related earnings in the second quarter behind particularly strong momentum in asset management. And following that Investor Day at the start of October, we have had a lot of Wall Street analysts weighing in, including one from Goldman Sachs. They said that their Investor Day presentation showcased an ambitious 5-year financial growth plan that emphasized Apollo's leading position in the alternative asset management sector. They said that they have a solid competitive standing marked by its exceptional capability to originate deals and capitalize on enduring market trends. And we also saw an analyst at BMO Capital increase their price target. They said that the company's targets for originations appear conservative, supported by increasingly broader asset sourcing capabilities, and with the stock trading at 17 times expected earnings, Apollo Global continues to offer growth at a reasonable multiple and remains the firm's preferred alternative asset manager idea. Apollo Global Management currently has 18 analyst ratings, coming in as a strong buy with 14 buys and 4 holds. And the average price target of $137 would pretty much be a flat upside. But let's take a closer look at the most recent ratings down below. A lot of them coming in from this past week have upsides from 8 to 18%. We do have a hold with a downside of 19%, certainly bringing down our average there. And when we scroll back into August here, several other price targets with some downside potential. So definitely a mixed bag of price targets on the Apollo stock. So that is a quick look at 2 stocks that are trending with Wall Street analysts this past week. Let me know your thoughts on these companies in the comments down below. I always love hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.